Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we're looking for a finished WXY double zigzag and we're now looking for price to move towards the upside. In this scenario, wave W is a zigzag by itself. In wave X, we have a zigzag flat and then another flat in a WXY correction inside wave X, which is perfectly fine. And then wave Y is another three-wave structure to the downside in ABC, ending inside the most common target area for a wave Y, which is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, which also was very nicely on top of this support area over here, sitting between 35.2k and 35.4k. At the moment, price is testing this resistance over here, a little bit of an order block as well as a daily naked point of control in here, sitting between 36.1 and 36.4k, and then the final resistance really is over here, which is the 36.7 to 37k area, before you then have the double top, and then you'd be looking for the golden target box above, which is sitting between 38.5 and 39k. Now this scenario over here can still be part of a bearish scenario in then a wave A, B and then a wave C expanding flat over here. Now expanding flats are very common in higher degree wave 4 structures, and if we zoom out, then the higher degree wave 4 structure is this scenario over here, where we're looking for a wave 1, 2, 3, then a 4 and eventually a wave 5 towards the upside. A flat structure has a wave A, which consists of 3 waves, then a wave B, which also has to be a 3-wave structure, and then a wave C, which is an impulse towards the downside. So when we look here for a W, X, and then a Y corrective structure, it can still be part of a wave A for then a 3-wave move to the upside in B and then a wave C. The most common target for B is between the 1.236 and the 1.38, pulled from the high to the low of this wave A, which is between 38.7k and 39.2k, which is also in confluence with the golden target box, again, which is very, very important resistance. Now, after that area is hit, you then want to see an impulsive structure to the downside in 5 waves, where the common target for a wave C is between the two 1.618, which based on an estimation of the high of B is then between 33.7k and 32.1k. If we then zoom out and we consider this a flat structure in a bigger wave 4, then we have to move this wave 4 over here, and then you can see that this wave C target area is in confluence with the 0.382 for a higher degree wave 4 over here at 33.4k, and also close to the 05 at 32k. But also, interestingly, in confluence with that key level that we have at 32.5k, and that is the beginning of this 1 hour gap over here. And quite often in a trending environment, you see gaps holding and then price moving away from the gap. The moment price closes in the gap, the probabilities increase for price to eventually fill the gap and therefore move towards the downside. So this flat scenario is definitely a scenario to keep an eye on, but in general you then still be looking for a move to the upside. And of course, in a flat, wave B has to be a 3-wave structure. So if price is just going to do this, then we're not thinking about a wave B, but instead we can think about wave 4 being in and then a wave 5 towards the upside. Now if we look at this ABC over here, then we had a potential 5, 3 and then a 5-wave structure to the downside. But as mentioned earlier, I don't like this wave 3 over here. It's very short, very overlapping as well, and you can't actually count a nice 5-wave structure in here. So this was not really something I was looking for, and therefore the probabilities of also then a WXY, which is the reason I show this. A WXY is a scenario where wave X does not have to take the high over here in order to still come down again for a wave Y, but because an ABC has a lower probability than a WXY to the downside here, this scenario as a WXY also has a lower probability. Reason being that a WXY corrective structure is not allowed to be a subdegree structure of a bigger wave W X and then a wave Y. So you cannot have this scenario and then a wave W over here, right? That's not possible. So because we are then looking for a WXY, the only possibility, or the higher probability possibility, is then an ABC if we're still thinking about corrective structures, not a WXY, because this ABC has lower probabilities compared to the WXY scenario. Now in the bullish scenario, we already spoke about it a little bit, but of course the alternative to a flat is that wave 4 is in, and you're going to be looking for a wave 5 towards the upside. Targets for a wave 4, 0.236 to the 05, 35.1 to 32K over here, and as you saw just now, the 0.236 has been very, very nicely respected indeed for our candle wicking inside, closing above, price moving towards the upside. So in this scenario, we're then looking for a wave 5, and there's a couple of ways to get a good estimation of a target for a wave 5. First, you can take a Fibonacci from the high of 3 to the low of wave 4, toggle on the 1.236 and the 1.618, giving you a target between 38.7 and 40K, which, if we look at the target boxes again, is in confluence with the golden target box mentioned earlier, but also the blue one above, sitting between 39.3 and 39.7K. Another way to calculate a target is to take the one-to-one of wave 1. So you take a trend-based fib from the low of 1 to the high of this wave 1 to then the low of wave 4, and then you will be looking at the one-to-one. But as you can see, the one-to-one is below the high of wave 3, which therefore does not make it an interesting target. Another way is taking a trend-based fib extension from the low of 1 to the high of wave 3 to the low of wave 4, and then you toggle on the 0.618, which is very, very high, and the main reason it is so high is because wave 4 is so short. The 0.618 is sitting at 42.8K, so that is still a wave 5 target, but that would be quite extended indeed. Something that I do have to say is that this wave 4 again is very short in time compared to this wave 2, and that decreases the probabilities a little bit that the low for a wave 4 is already in, compared to a potential flat, which is a common structure in a wave 4 and an impulsive environment where you get a wave B, wave C going to like the 382 area and then move to the upside, so that you have a longer 3-wave structure over here. But in both cases, you're going to be looking for a move up, either for a wave 5, meaning a straight line to the upside, or you're going to be looking for a 3-wave structure in a flat to the upside. So it's important to realize what structure we get towards the upside. Now on the micro time frame, on the 50-minute, I've actually been working this morning in Discord as well, talking about, first of all, my feelings after the morning update, because I wasn't happy with it, but I couldn't get another clean one in, so I was like, fuck it, I just put the shit online. But there were a couple of things that I actually didn't say, wanted to say, but I had to put something online. It was already 8 a.m. So you can read some stuff over here. Already shared the WXY scenario, which was increasing in probabilities at the moment when riding. It was neutral. On the micro though, it was very likely we were going to take this little high over here, and then it's about observing the reaction, which I did, talking about the order block. So I also mentioned the order block to the group over here, and the order block for me was important, and I said once it got hit and price closed multiple candles above the 0.5 that I just showed here on the screenshot as well, the probabilities increase for continuation to the upside and a finished Y or C, preferably a wave Y. Right? Looking at the sub-degree structure, preferably we then have a bigger WXY going on. So on the micro, this was the 15-minute order block over here, right? A little bit of resistance, but eventually moved through absolutely fine. And at the moment, of course, we're at resistance here, where we do have a daily naked point of control just above price. We actually didn't hit it just yet at 36.300. If we then look at the probabilities of the different scenarios, then currently over here, you can see that on the medium time frame as well as on the low time frame, the probabilities are towards the upside. So on the medium time frame, we are looking for a 4 and a 5. Either wave 4 is in and you're going to be looking for a straight line to the upside in a wave 5, or we're looking for this to be a flat, which is then on the low time frame, currently the higher probability scenario because of the time of this wave 4 over here being quite short, right? Then I'm talking about the green wave 4. The fact is wave 4 is quite short in time compared to the wave 2 below increases probabilities for a potential bigger 3-wave structure over here. But even if you're looking for a flat, you're going to be looking for a move to the upside. And also, if you're looking for an impulse to the upside where wave 4 is in, and you look for 5, then you're also going to be looking for a move to the upside. But it's mainly about the sub-degree that we get to the upside. Is it going to be impulsive, a straight line to the upside, or do we get a 3-wave structure? By all means, we currently are at resistance. I always like to go level by level, observe the reactions, and then we'll take it from there. But currently the probabilities are higher on the medium time frame for the bullish scenario and on the low time frame for the flat scenario, which also means you're going to move up, and we just have to observe how price then moves to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.